Okay, so for this next video lecture, so we are still in the substantive procedures to audit the asset accounts. So this time we will be discussing on the substantive procedures to be performed by the auditor to audit the investment securities. Okay, so first, the auditor can inspect and count securities that are on hand, or often these are placed in a bank safe deposit box as a form of internal control to minimize the uh, mishandling, okay, or misappropriation of these investment securities by the employees or even the management of the entity. So this inspection and counting will also help or assist the auditor in determining the existence of the investment or of these investment securities that are being claimed, okay, by the entity. So this procedure, okay, as mentioned, will address the existence, and also this will provide any evidence that no fraud, okay, which is in the form of a substitution, meaning there is an authorized sales or subsequent repurchase of such investment securities, okay, has occurred during the year. So this inspection will lead the auditor to determine the existence and any fraud that may exist in these investment securities. So a client employee should be present during the inspection, okay, and counting of those securities on hand. So this is so to avoid any confusion over any missing securities. Of course, if the auditor will inspect anything that the entity owns, there should be someone, an employee or even the member of the management who will be present during such conduct of inspection and counting, because in the case where the auditor will found out that there are any missing items, then um, they will be informed immediately, and those persons who will have the responsibility over it will um, look for the answers or the reason why there is a deviation from what is recorded and what is existing, okay, on hand in the entity. So in examining the security certificates, here the auditor will determine whether these securities are held or identical to those which are recorded in the books, okay, or for example, all those security certificates present or existing should also be recorded. So this can be detected by the auditor using the certificate numbers, number of shares, face value, and other details which can be taken from the certificate, okay, to make sure that these are recorded properly and completely. Okay, aside from the inspection and counting, the auditor can also obtain confirmation of the securities which are in the custody of an outside party. So this can be held in the safety deposit box in a bank or in other financial institution who are offering, case the handling of such investment securities. So here, the auditor can ask from them directly if these are indeed existing. Okay. If the client securities are held by an independent custodian, like for example, these are held by a bank or a trust company, so any evidence related to the existence assertion will be obtained by the auditor by using the confirmation procedure, okay, for the securities from such independent custodians. So as mentioned also earlier. Okay, aside from that, the auditor can also uh, perform simultaneous verification. Okay, so here, in this case, simultaneous verification is inspection, and at the same time confirm, or for example, he is confirming from an outside party. So at the same time, he is inspecting, okay, those items, because this is in the case where the entity uh, has given the custodianship, okay, to a third party or to those financial institution, okay, which provide such services. Okay, meaning there is no securities present in the entity. So everything is in the hands of the custodian or trustee. Okay. Another, so in this case, owing to the liquid nature of some securities, like for example, the financial asset through fair value, at fair value, I mean through profit or loss. So in this case, the auditor can inspect these securities normally at year end, simultaneously with the audit of cash and other related items. So, in this case, aside from the investment account, he can also, during this procedure or substantive procedure, he can also audit at the same time the other accounts. Okay, like in this case, aside from auditing investment securities, he can also touch cash and other related items to it. Okay, and also performing other substantive procedures that is applicable, okay, to that specific account. So, aside from those mentioned, so there are also other typical substantive audit procedures that the auditor can perform. So, first, the auditor can review the disclosures, okay, required by the framework, okay, for securities or investment securities. Next, he can also inquire from the management about any pledging or of these investment securities, if this has been pledged for a loan, okay, or credit, and also to verify that any disclosures required by the standard is presented by the entity together with the financial statements. Next, the auditor can also review the loan agreements, okay, for such pledging, okay, of the investment securities. Another review of the classification of the securities, okay, because in this case, securities are according to their nature, okay, and the existing quality, or how this investment will provide the benefit and for how long, okay, and how it will be accounted for and measured. Okay, these are classified according to if they are uh, classified under the financial asset at fair value, through profit or loss, or through other comprehensive income, or at amortized cost. Okay, so each of this type of classification of securities has their own guidelines based on the standards on how to measure and uh, how to measure it initially. Okay, how to allocate any decline, okay, or impairment in their value, how to recognize the received dividend or share from the profit, and how to measure it subsequent to initial recognition. Okay, so this should be properly accounted by the entity using the guidelines provided in the standard. Okay, because if the entity um will not follow a certain guideline, then it will have the effect of understating or overstating this audit investment security accounts. Okay, next, the auditor can also vouch of the purchases and sales of such securities during the year. So again, vouching is done from the records of the books of accounts of the entity, and then referring this to any documents, okay, which serves as the source documents for these types of transactions relating to our investment security accounts. Okay, next is the auditor can also review of the cutoff. So again, cutoff are used to determine if the entity was able to record those transactions pertaining to the correct accounting period. Next, the auditor can also perform analytical procedures, okay, that will serve as corroborating evidences about the existence, completeness, and other assertions that the auditor may satisfy, okay, based on the assertions given by the management. Next, the auditor can also reconcile the amounts of the dividends received by the entity, which normally, if this is public entities, okay, in which this investment are placed, then the dividends are usually published, okay, or the auditor can take this information from the records which are generally available from the database, okay, from the internet, to verify if the amount or the value of the investment is correct, okay, and completely recorded. Because normally when dividend is given, dividend are based normally in the number of shares owned by the entity or based on the amount of their investment. Okay, so therefore, the auditor can determine the completeness and accuracy of such balances. Next, the auditor can also put and extends summary the investment security schedule to verify if there are clerical errors. Next, again, the same with other accounts. He can reconcile the inventory schedule summary to the general ledger for accuracy, because again, these accounts are normally forwarded to the financial statements. Another is the auditor can also test the amortization of premiums and discounts. The purpose of this is to verify that investments are properly valued, because in this case, if investment has or was placed with premium or discounts, we all know that this needs to be amortized, okay, because amortization of premium and discount is accounted for separately from the principal amount of the investment. Next, the auditor can also determine the market value of the securities classified as financial assets at fair value to P&L or OCI. Okay, so again, we have the guidelines on how to classify and measure these types of security investments. Okay, and lastly, the auditor can also review the audited FS of major investments to test whether they are properly valued at year end. Okay, so normally, if these are audited, so again, the auditor will also um, look into the auditor's report if the FSR fairly stated or not, or any misstatements has been corrected, and if there are any misstatements related to the investment accounts, okay, to verify if it was properly valued indeed at year end. Okay, so those are the different substantive procedures that the auditor can perform in auditing the investment securities account.